The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Thursday, the 16th of May edition, and halfway through the month of May. January, March, April, May. We're almost 5 months into the year. Time just kind of flies by. Okay, let's get to the markets right away. This to me, what I'm looking at here is so. There are inflection points that could be coming up right now. Deflection or inflection points. And essentially what I'm looking at, and I'll go through it step by step, step by step. We just had that as the song that introduced us for those who don't get the commercials. If you're looking at Tiger TV, you'll see that we're looking at the left side here. Oh, this is General Electric. I'd like to look at General Electric. I love to go through the market in order every day, so we'll just do that right now. We'll see that there's a potential for a peak E here. Actually, you know what I'm going to do? For this particular moment, I'm going to go to what my subscribers get every single day. This is what they get. This is just one of the comments that I make. There's still a whole slew of stuff I do at the bottom here. This is really important. When I say inflection point, I mean that there's a possibility of breaking to the upside, which should clear very strong channel resistance, or to deflect lower, which will say, okay, now we've established quite clearly where the levels are that we need to focus on and how to focus on them. So we've been lightening up on the long side by raising stops. At the same time, I've only just implemented our first short in quite a while. So I'm going to run the numbers quickly. Dow is up 3 at 50,279. Comp index is up 6 at 34.78. The S&P's, it's down about $1.50 at 16.57. You've got gold having been smashed to the downside again early this morning, coming back. It's now 13.87 minus 8. That arch formation that I've been talking about, I believe we're going to go from the arch to the M formation. We're real close to at least a pretty decent bounce. I'll explain that as we get through to the different things like the currencies and the dollar, which is in leg C, maybe making a peak C with one more new high to come before it takes a bit of a breather. You got crude oil up 61 cents, but high-grade copper is up 2 at 3.29. It's really been acting poorly. Significant is that bonds are up over $1, up 1.06 at 145 and 12.30 seconds, and the dollar is down 36 seconds. Now, this is what I want you to go through step by step. I'd say that from now, this was back in late April, I will be introducing to a much greater extent my the ChapmanWave Trends Watch analysis, prognosis, theoretical, because I don't do those studies that economists do, so I do not have rigorous pages and pages of documentation sitting at the back of my head like it always does. It very often turns out to be prescient. I have no idea if it'll be this time or not. But thank you, Brian from San Francisco, one of the attendees at my most recent seminar down in San Francisco, live seminar. It was actually a workshop. I plan to do one. This is a surprise coming up. I'm planning to do one, a daytime one, coming up fairly soon, right here in the Boston area. So Brian sent me this thing about San Francisco Business Times discussing how all the projects that were being pushed earlier on, like in 2005, 6, 7, were put on hold. But the permits had already gone through, and some of the permits had been taken out, but they didn't want them to expire. So now they've reinvigorated, reinstituted those, and the buildings are starting to come up. There showed me some pictures of some of the buildings. There's going to be the tallest building in San Francisco to be completed in 2016. I mean, Is this not to script exactly the way we always want to look at things? So far that's that. Next thing is Boston Globe again. I don't know how the Boston Globe has suddenly become this orientation instead of a look back. They actually do look back, but funnily the look back is really my look forward thing. So now in the G section of the Globe today, Thursday, May the 16th, they've got a front page, Just Dandy. Now, for those of you who are a little older, you know what I mean, a little older, you'll know that dandy referred to those people, those men that really dressed up very, very smartly. So there's a new show at RISD, which is the Rhode Island School of Design in Newport. Hope to see this. It looks at men who've raised fashion to an art form, and it's got all these pictures, and lo and behold, I bet if I go back and I track when these particular outfits were worn, they will coincide at very significant periods. That's that. Next question I had is, in the technical aspect, usually Fridays where I do more technical stuff, the ChapmanWave tech, I get into the nitty-gritties. Well, a question was on the Dow. Why I said today that I think there's very little chance of it recycling to an instant restart in the diamonds or the Dow, because of certain aspects. So Jim, who's taken my Master Trader series, is diligent ChapmanWave, works really hard at it, asked the question, why not? Well, there are a number of reasons. I'm not going to go through them right here on air, but what I wanted to say is that there are certain technical things that I teach in my Master Trader series that if you look at the way that one particular technical indicator is acting, and that's the fast-moving moving average of that indicator, of that tool. It's suggesting that, yeah, even if we got a recycle here, and we got a new leg, say tomorrow is a new high, not today, but tomorrow, that'll be leg F/B, we could in fact go to a G/C, but at that point, there should be a pretty sharp pullback based on this methodology. I'm looking at this and I'm saying, this is outstanding action. We have a mixed portfolio at this particular point, all longs, except we've initiated a short position. We still have our Dow Diamonds 200% long, and this is going to be a little bit of a conflict, and it's going to resolve itself one way or the other within a day or two. So I needed to get that out. Then the next thing is, we are at TFN, we try to be as current as we can in just about everything. You are going to be one of the very first people in the Boston area right now to hear that the Boston Symphony Orchestra has just announced this morning the appointment of Andris Nelsons as its 15th music director. The 34-year-old Latvian-born maestro is one of the most sought-after conductors on the international scene. He will begin his tenure during the 2014-15 season, and starting September 2013 will serve the BSO Ray and Maria Statter music director designate. Now, if you know Ray Statter, he's an unbelievable entrepreneur, went to MIT. The new building, well, it's not new anymore, but the building designed by, why am I forgetting, the contemporary designer who has these very arty, flowing patterns that very often create engineering chaos in terms of leakage and all sorts of things. Well, the Statter building that's the dormitory. I can't think of in the day. One of us will tell us. Someone will tell me in the den who I'm thinking of, who the architects. You can Google it. Anyway, so that's exciting because Maestro Levine, I thought was just absolutely perfect for the Boston Symphony at the time. It is so sad that he had all these ailments and couldn't continue. I think he elevated the Boston Symphony. You could hear parts being played during a familiar Beethoven that you've heard dozens and dozens of times. Some of them I've even conducted when in my former life as a musician, professional musician. You would hear voices like the viola part that you never heard before, because he was an opera conductor essentially, and a fantastic pianist. And he would bring the voicings out that you never heard in the other. He did Moses and Aaron by Arnold Schoenberg, which is, I don't know if it had ever been done by the BSO. Just an incredible performance. Anyway, he resigned because of ailments, physical ailments. It's real sad. I hope he's doing really well. But now we've got a new conductor, a young conductor, 34 years around the world. They're going for young conductors. This is really exciting. He is a fabulous conductor. And Andres Nelsons. So that's a break. How about that? Right here on TFNN, breaking news. And now let's go to the next thing. So that's the Dow Diamonds. We did that. And then a question we had in the den, I'm going to right away. And then we got callers. Whoa, a lot of callers waiting online. Let's go to, first of all, I'm going to go to the question in the den because that was the first. And that was Goldman Sachs. I want to get to that because this is telling us about what's going on and why I'm going to have to make some real strong decisions later in the day, by tomorrow at least, about the status of holding the 200% long or being short. And that's going to be a decision that I want. The market might make it for me. But Goldman Sachs is at 156.30, up 69 cents in leg D. You understand? These leg Ds, they are potent. And Goldman Sachs has a target of 159 round number high at the last peak E in the ChapmanWave made on the 19th of February. And a pullback from that, I just said it right, 159 round number high, 159, 159 R/N high, right down to the 137, was it? 137.29 low of the 22nd of April. And now we're in leg D. But the MACD is at 93%. No, I always say that. MACD is very strong and the stochastics at 93%. It is excellent right now. There is going to be news that comes out that has to be market pervasive. It has to be intense and it has to be the selling has to be intense, I think, to get a major sell-off now, a sell-off that takes 3 to 5 weeks, that kind of sell with, rather than the 3 to 7 day kind of sell-off, because these, to get the stochastic under 80% again is going to take Goldman Sachs dropping very sharply under the 9-period moving average of 151.67. So here it is. I don't know where the question was to go long or to go short. It was just about Goldman Sachs. I've got to look at this. I'm going to be, when I give one of these workshops coming up soon here in the Boston area, I'm going to explain how powerful the 120-minute chart can be. For those of you who don't get it, 60-minute chart is very good. I love the 120. Look, the ChapmanWave methodology is find the lowest bar and merely count each successively higher peak until you get to D, and then you've got to be careful. Well, lo and behold, you had 1, 2 peak Ds, and now you've got a third leg D, and the stochastic and the MACD are still very strong. How it pulls back is going to be very important. So if you're long, I would try to keep a core position as long for now, but maybe you want to do a little scaling out of it if we start to see signs that it's breaking under 154. But I like it. I'll be right back with Joe, Craig, and Larry straight after this.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Just want to quickly glance down on my page to see that I covered what I need to cover. Yes. Okay, now we're going to go to callers. We've got the first caller is Joe in Boston. Hi Joe, how are you?
How are you, Basil?
Very well, thank you.
Good. I don't want to get you too off track, but I just wanted to ask you a quick question that's off topic.
Whoa. What do you mean too off track? Are you implying that I get off? Me? I get off track? Sure I do.
Did you see the Bloomberg piece on Elon Musk?
No.
Okay. I'll email you the link to the video. You can watch it over the weekend. It's about an hour. It's amazing. But anyways, let's move on.
You know, Musk was actually he lived. I can't remember now if he was born in South Africa or he lived in South Africa.
Yeah, he was born in South Africa. Yeah.
Right.
But anyways, I wanted to have you compare TSO to VLO. If you could quickly bring those two up and tell me whichever one you think looks better. Can you talk about that one?
Yeah, they're actually two very different charts.
Yeah.
VLO is Valero. It's already made a peak in the weekly, peak D, very wide, long-legged doji, which says, yeah, you could come back and test the candle, the wick of the 39.58 level. Okay. It's trading at 39.56. But this is what I would prefer. If you're looking at a stock that is already showing that it has the strength to approach its all-time high, then I would prefer to be looking at TSO Tesoro.
Okay.
So Tesoro.
I thought that one looked better, but I wanted to just get your opinion.
Sometimes people choose stocks. Let me see. The one's trading at 56 and the other's at 39. Sometimes people choose, they have a choice of two, and then I don't know whether it's a habit or whether it's just instinct. We tend to go for the low-priced one because we get more, even though we might turn out to put the same dollar amount. It feels like it's more. But actually, in this particular, let me just explain to you what I'm thinking here.
Okay.
In my weekly chart of Tesoro, TSO trading at 56.86, down $1.29, and actually this is a pretty critical moment on the very short term for Tesoro. But if you look at the monthly chart, in my black charts, I don't know if I'll be able to pick it up because the background, I had all of these oils, I them notated, but I'm redoing them here on the white background only because it's just I can even see here in the using the Tiger technology to be able to go to the charts live. I can see that it's just a little easier, and some people really do like to print out things because they don't have time to look at it right away. They want to get back. I could have this as a peak G, but the MACD is very strong. The fast-moving average is right up, way above the slow-moving average. It means it's got a lot of time to come down. So, yes, it says, the price could come down with that because essentially what the fast-moving average does is it relays to you the visual formation of the price as it's moving up. Now, when there's a divergence between that, that's when you have to take note. At this particular point, it's acting as well as the price. The slow-moving average is still headed up, but we know that when a fast-moving average crosses a slow-moving average, that slow-moving average can then take quite a while to start moving down. It's a very, very lagging indicator, the slow-moving average. But the stochastics at 93%, and if history is our guide, now this really speaks to the economy. I'm going to move off topic just a moment. I'm going to do what you knew I would do.
I love it, Basil. I don't mind it at all.
If you see that there's strength in the oil sector, whether it's the drilling, whether it's the price of oil, preferably I would think in the drilling for now, then what I'm thinking is that is a market positive. In a sense, it's almost as if it's taking away from the negativity of copper, and it's saying, there's activity in the market, and the economy is actually starting to strengthen, even though we keep getting these crazy numbers that are they're not really concurring. So this is my thinking right now, that I'm calling this a new leg B. I probably should be very conservative and say G/B. I don't no, that that would be E/AB. Yeah, G/C. Rather than this actual B that I've got here, because let me just explain what I've done. Is I've called because the decline in the monthly after the March high of 30.15 went fractionally below at 20.77, the low after point D, which was 21.04. I really want to be strict with my rules, and this looks like a brand new buy signal. It can fail. Now, this is what I'm looking at. I'm going to just spend a moment there. The break's coming up. I hope Craig and Larry can wait because they've got great questions to ask. I want to just hold on here because the 65.98 will be the cup formation back to October of 2007. The reason why I wanted to spend a moment on it is we've got the patterns. Even the EWJ, the Japan ETF, is making the cup formation. I'll be back right away with Joe in Boston.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow is up 16. S&P is up 0.86. I have to tell you, buy the dips, buy the dips, buy the dips. It's just amazing how that keeps working. But most importantly is I'm watching so closely to see if there is no question in my mind that we are close to a rotation. And the rotation could be unfolding if there's a particular stock that we own that is able to get just another 40 cents higher. It'll say to me, ha, now we're going to be able to watch to see if there's a rotation going on and how that's going to unfold. We're on right now with, we've got Joe in Boston. We're looking at TSO Tesoro Corporation. And if you look at the peak F that was made back in, this is what I call, I'll have to start renaming these, the double camel hump. It's just, if you know that the camels sometimes have one hump, but there's one kind that has 2 humps. Well, this is where you go to a peak D. We saw this in the weekly charts back in 2007, and I kept saying, I do not have a sell signal yet. This is the weirdest thing on earth. That was in August. I said there's a chance that we're going to make this right arm extension in the weekly charts to go maybe 1 or 2 new peaks, and then it pulls back. And it's exactly what happened, and that is what happened to Tesoro back in 2007, October, when it went to 65.98. It did exactly that. Now you've got a rally that is making this cup formation that's trying to go back to 65.98. Well, 65.98 is 9 points away. So I'm not sure we're going to be able to do that now. It looks to me like it could be a sideways consolidation. 48 to 49 would be the 9-period moving average in the monthly. Tremendous support. But I have to call it B because it's just a really good chance we're going to take out 59.90, and that will start leg C. On the shorter term pattern, what I'm looking at is if there's a failure here because the MACD and stochastic are a little bit weak in the weekly chart, then I get a pattern. I'm going to quickly show it here. I call it in chapter 22. It's called the drop bucket formation. Essentially what I'm looking at is a double top. That's exactly the pattern we would be looking at here if, on the short term, I mean by next Wednesday to Thursday, there is a pullback and TSO starts to take out 52.62. On the daily chart, so far, the failure today is very disappointing because all it needed to do was instead of going to 56.80, if it went just pull back to 57.40, something like that, and then spiked above 58.52 over, it could still do that, but it spiked over the 58.52 level. Come Tuesday or Wednesday, automatically I'd be looking at, and I'm sure you would be 59.90 would be my target on the right.
There's always some weird price action during options X week, especially the last 2 days of the expiration. So sometimes you get just funky action because they start pushing stuff around so they can unwind positions. So I'd say today kind of looks a little weak, but it could be just somebody messing around.
Right. So what I'm looking at is that at this particular point, I have to give the bias to the tide of the monthly. The weekly had nice action, but not great action. Technically, price-wise, it's fabulous. I love the little pattern that it's making, especially from the doji low from 5 weeks ago in the weekly. But I need to see the MACD go back. It's at 65, at least to 73%, and the stochastic and the MACD has to turn around and cross positive. The daily now is really very important. So short term, if it pulls back under 55.70, it's got a bit of a consolidation going on. I like it looking out. All I'm saying is that I think it's in a consolidation phase. It needs to break out about 59.40 or 50, and that's going to be very positive. So I hope that helps you.
I'm looking forward to the Trends Watch. I love your show. Thank you.
Thank you very much. So that's what Joe in Boston. Now I'm going to go to Craig in Toronto, all over the show. I love that. Craig, how are you?
Good morning, Basil.
How are you doing?
Not bad. It's a lovely day here in Toronto. It's about 20 degrees Celsius.
Oh, that's
Finally,
good. I got cousins in Toronto, and I've been there a couple of times. Pretty place.
My question is on the ChapmanWave, how to use it with options. So I'm looking at the SPY weeklies, and basically to trade them during the week and work in the afternoon. So I try to do something in the morning and then go to work and have a little bit of fun money. Okay.
This is the way I would consider it. And I just haven't done it for a little while. I was thinking I've actually been preparing for quite some time now for some different. I like to vary my own trading. I have positions that I just put on, and I sit one account that of mine that I have. I've had 2 trades in the last 7 months, and each one has done very well. I took the profits on one, and I went to the other. So they're all different methods that I use. I can do the futures. It just I like to vary it because I'm busy testing different techniques all the time. Okay. But this is what I would do. If you're looking for swing trades, then the 120-minute or the 60-minute would work very well. You know what I would like to do? Are you able to call me tomorrow morning?
Yeah, I can get in tomorrow.
Then I will prepare. I'll tell you what I will do. I will prepare my options platform.
Okay.
So that I can pull up the actual option as a ChapmanWave technique. So we're following the price of the option. That's number one. I think tomorrow is going to be a great day to do it. And I'll give you some kind of idea of what I would be looking at. I don't want to give you the actual trades because I would need to be following it, but I'll give you the idea of what I'm looking at, number one. Number two
I basically look at the ES Mini as far as signaling, and have the technicals up with plus the RSI and RVI.
Well, let me just show you something here. Are you able to look at okay. If you're looking live, let me just see how much I've done. This is a 30-minute. I don't want to do the 30-minute. I'm going to grab one that I did yesterday. Let me see if I can pick it up. No, I don't want you to do 2-minute, because if you're going to do the options, I think you want something like between a 5-minute and a 10-minute to set things up.
Yeah. I think I'm looking too close. I'm looking at a 1 minute, and it just moves too quickly.
You know what?
And you miss things. So I'll call you tomorrow, and we can review it then.
I will prepare something over the evening, and when you call tomorrow, I'll give you a sense of what I'd be looking at, the chart formations, how you can look for the double top, treat it as a target point. So you would actually just take your profits and you're out, or set it up with your stop and everything, and you come back and you know whether you're in or out.
That's it.
Okay. All right.
All right.
Now, another way to do that is to consider the diagnostic trading that Darryl talks about.
Okay.
Because what you can do in that particular instance is you can set it up so you can have multiple trades, all based on your analysis. Mm-hmm. And then what happens is that it doesn't get canceled out by 4 o'clock, because you know that sometimes we can have one market going fantastically up until 3.
Yeah.
And then you think, oh, that's it, I've lost everything in my option. But if you're using something like this diagnostic trading tool, you can stay in the position, because you can have a very sharp reversal 4 o'clock till 3 o'clock till 4 o'clock, the hour before closing.
Like yesterday.
Yeah, exactly. So I'm going to make a couple of suggestions. Let me think about it. I'm going to write it down. I'll have we'll take 10 or 15 minutes just to look at a way of using the ChapmanWave methodology, just the counting the peaks, etc., and the kind of tools that I use, and we can do that, and we can go through it in more detail, because I'd like to have the option set up so I can just click on it and we can have the actual price of the option being tracked in the ChapmanWave. That's what I love to do.
Okay.
So let's do that. And then I'd also like you just to, in your own thinking, just tell me what are the favorite time frames and the types of things that you've done successfully so far, so we can deal with that. Yes. So give me a call tomorrow. I'm looking forward to it. Thank you, Craig.
Right. Thank you.
Thank you very much. Let's go to Larry in Cayenne, Wyoming. Hi, Larry. How are you?
Well, hey, how are you, Basil? Nice
Very
to talk
well,
to
thank
you. Good. My question, I'm going to limit it to, because, you're a busy guy, to TLT. Basically, the TLT's been under all the moving averages. So my curiosity, the only way I could get some sort of turnaround point, swing low, was just using a weekly chart connecting the ascending lows. Is that how you would have handled determining the swing point, the support for that?
Okay, let me just say, you're looking at the TLT weekly. Now, this is what I've got. I'm showing my chart here. I'm going to expand it. You're talking about the weekly. I'll go to the weekly, and I'm going to expand it so that you can see all my notations.
Well, my question is, you made a comment earlier this week that you see support at 117, and I know you don't use Fibonacci's, but it did hit the 786, and it also would have corresponded with an ascending line of support from the January 11 swing low. So I was curious if that's how you determined your support.
Well, I'm always embarrassed at that question. There are times where it's absolutely specifically the 9 EMA, it is the left side support, it is a certain doji candle, and then there are other times where something's going on in the back of my head, and I'll say the number, either the resistance or the support. For those of you who follow my daily calls, you'll find that the levels so often that I talk about in the Dow Diamonds or whatever it is are actually the levels that get hit very closely. And I have found over the years that when I don't go back and read what I said, and I just try to make it up as I'm trading, I will get wrong levels, and then I'll go back and I'll say, wait a minute, you specifically said this morning that's the level. And then I ask myself why. There are times where I do the computation in my head because I'm saying at 100 and say, let's go to the TLT when I said it was 2 days ago. We were trading in the 120s, 120 point something. And sorry, that's not that was the weekly. That was in the we were at 117, I think about 84, and I said 117 has to hold the support. Well, one of the things that I was looking at in the back of my mind was that I was expecting that this is going on in a split second, that I'm saying the Fed is propping up bonds. No matter what happens, they're going to try their very, very, very best. Just like they kept hitting the dollar, bang, 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 wouldn't let it break out into the 87, 88, 89, 90 level each time it tried to rally. So now I'm looking at it and I'm saying, okay, that's the level. The 116s was a very obvious place, but I thought that if I looked at 117 and it broke 117, then that would be very important. Why? Because it would say that there would still be some kind of support in the stock market, and I saw that there was, in fact, stock market support. So I really can't answer that other than I had gone back, and I did remember, because I keep the sort of, in the background of my mind, I'm keeping kind of a tally of the number that certain key indices keep hitting. And if you look back, you'll see that there was a whole cluster around the 116.15, 170, 116.08, 116.53. So that, to me, is that cluster is really important. And you'll see that the low yesterday was 116.42. So that's why I said 117 was really important. Now look what's happening. It's bouncing back up. So to answer your question, I am very specific most of the time based on the data that I have. And if, oops, I'm picking up the wrong thing. I wanted to pick up the 120-minute chart of the TLT. And you will see that the 117 back, that was a couple of days ago, the TLT was at about 117.47 on the 9-period exponential moving average as key resistance, support, which now has been resistance, which broke out today. So I like to be specific. I like when I get very often, I get emails from people saying, how did you get that level? Then I have to go back and rethink the whole thing. But very often it's as simple as saying, look, that's the 9-period moving average support, or if you go to a smaller time frame. But other times it's just I can't explain it. And I've done it for years. I cannot explain it. People have asked me for years and years, how do you get the numbers? There are times where it just pops up in my head, but it doesn't pop up for no reason. It pops up because I'd done homework at some point, and that's what I remembered. So I'm embarrassed to say I can't really give you. I'm sorry, what?
That's why you're you and I'm me. I mean, I don't have this art form down. And how did you determine that 118.90 was detrimental to the stock equity market?
180. But the only reason that I'm thinking that is if it's able to sustain, in other words, right now it's trading at 118.57. And my thinking is that 118.94 is the 9-period moving average. Here I am using it. That if bonds actually spike that much higher, look at the TBT. The TBT has gone peak A, peak B, and it hasn't yet taken out the same cluster that I'm looking at in the TLT. On the inverse side is the cluster on the TBT between 65.70 and 67.75. So I'm saying, wait a minute. And if I look at the weekly, the TBT it's at a point where it is really close to attempting a breakout to the upside, but it just hasn't got it yet. So you see how I'm doing it? I'm trying to relate things that sit in my mind. I don't know how to explain it.
All right. Well, I appreciate it. Thank you very much.
Thank you very much for calling. I'll try to work out how these things happen. Thanks, Larry. I appreciate that.
Bye-bye.
Bye. We're going to look at Tesla when I get back, and we're going to look at EWJ. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, Basil Chapman. Now, I want you to do a couple of things right now. First of all, I'm never afraid, I'm never embarrassed. I'm upset, but never embarrassed that I, in positions that I wanted to get in or back in, and they take off without me, I'm upset. But the analysis was correct. Everything was correct, but my entry point was not always what the best one. So I wanted to just do two things. Before I go to, I'm going to be showing a chart right here of the EWJ, which is the iShares of Japan. Why with Joe, when I was talking about the cup formation, so many stocks wanting to retest their cup left side highs, EWJ went to 11.63 back in March of 2011. Then it drops down to, this is the iShares MSCI Japan Index Fund, and it went down to 871 in July of 2012. And what is it now? It is in leg B up. I could call it E, but it doesn't. This is a leg B. Everything about it, it's really positive. I spoke about it yesterday. When countries start to copy us, remember I spoke. Some of you might remember that I talked about this 9 years ago. I said in 1986 and 7 for my Market Line newsletter that used to go out to mutual funds, etc. I spoke about, this is actually even way before, I was talking about eventually the United States will export democracy and capitalism. And unfortunately, I hope I'm wrong. At some point, there's a chance we might start to import socialism. And I hoped I was wrong. I'm leaving that. I'm just putting that out there. But most importantly, I spoke about how countries copy, emulate one another, just as chart patterns do. Well, if you go through this carefully, what you'll see is that the pattern of the U-shape, this cup formation, is being formulated everywhere. So that was what I wanted to talk to Joe about in terms of the TSO chart, that there was a good chance that it could try to go back to its monthly high. Well, we've got leg F, unless there's been a recycle in the EWJ. This is a powerful move. This is nothing about the technicals say that it's a peak F. It says it's more likely a new leg B up in the weekly chart, and the daily is just getting a little toppy right here, having gone to 12.11. Now, talking about toppiness, look at TSLA. I said to subscribers, this is the sexy stock. I want to use it as a trading vehicle just for fun. Well, I had it on my list yesterday during the day to go because it made a peak C. I wanted to trade it today for my subscribers if it had just an ordinary day today, waiting for that leg D. TSLA is trading at 90.74. It made a high of 97.12 3 days ago. I think it will make the D. And today there was a round number high of 95. Thank you for one of the members of the Den pointing that out to me. And I've got it in leg G/C in the weekly and leg D in the monthly. So this is going to be very interesting. I wanted just as a trade. I don't know about the shorting. Might be very difficult to short. So I don't even know about the shorting. But I wanted real sharp declines. This is going to be the sexy stock. This is the trading fun thing that we can look at. If it at any point pulls back to the 72 to 69 area, I think it could restart a whole bunch of powerful moves up and down and up and down. I'm going to be watching it closely. I wanted to mention those two stocks. Why? Because one is serious. If Japan is now copying us after 20-something years, and it made a peak F in my work, I can't remember if it was an E or an F, in the daily chart, going to its all-time high. That was when I really figured out that this ChapmanWave methodology, what I call the 7-wave form initially, was really powerful. So all I'm saying here is that other countries are starting to emulate Bernanke's mega bull market maneuver, and we're going to see that flow. I think we're in an area right here that is very critical. I'm going to be watching it closely. We're taking positions. I'm starting to be much more defensive. I see no reason why not. But we also have some longs that are still working, and some of them, one is up 70%. I'll be back this afternoon with Tom O'Brien.